I'm sure you can see we are all in our traditional wear, what we call the fugu. We stand with the efforts by governments to promote our traditional wear, and we urge you all patronize these traditional products. We see this as just as we see the issue of dollarization, because our tastes and preferences do matter as far as macroeconomic outcomes are concerned. So at the basis of our consumption, investment, and production decisions. And so our tastes and preferences have to align with what we expect to achieve. So on that note, the Monetary Policy Committee held its 129th regular meetings from the 16th to 18th March 2026. This was to review recent economic developments and assess risks to the outlook for inflation and growth. This statement summarizes the key discussions and the committee's decision on the monetary policy rate. At the previous meeting in January, global growth was resilient, supported by accommodative monetary policy stance in advanced economies, stronger consumer and business confidence, and increased investment spending, especially by technology firms. However, the global environment has since changed drastically, largely due to the Middle East conflict. The conflict has disrupted global supply chains, increased crude oil market volatility, it has raised financial stability concerns, and heightened global uncertainty. Although global headline inflation has been on a downward trajectory, the recent surge in oil prices has renewed inflation concerns and may compel some central banks to reassess their monetary policy stance. Consequently, global financing conditions, which remain broadly accommodative, could tighten in the near term. Depending on the intensity and duration of the conflict, these developments could weigh on the global economic outlook. Now, on the domestic front, provisional data released by the Ghana Statistical Service indicated that real GDP grew by 6% in 2025, compared with 5.8% in 2024. Non-oil GDP growth accelerated to 7.6% from 6.1% over the same period, largely driven by the services and agriculture sectors. The Bank of Ghana's high-frequency real sector indicators pointed to a sustained pickup in economic activity. The Real Composite Index of Economic Activity recorded an annual growth of 8.4% in January 2026, compared to 6% for the corresponding period of 2025. Increased credit to the private sector by banks, industrial production, international trade activities, and consumption of goods and services by households and firms contributed to the improvement in economic activity. The bank's confidence surveys conducted in February 2026 reflected positive consumer and business sentiments. Consumer confidence improved on account of easing inflationary pressures and optimism about future economic conditions. Similarly, business confidence strengthened on the back of realization of operational targets and optimism about industry prospects amid improving macroeconomic conditions. Headline inflation declined further to 3.3% in February 2026 from 5.4% in December 2025, and this was driven by both food and non-food inflation. Core inflation, which excludes energy and utility items, also declined, indicating muted underlying price pressures. Additionally, inflation expectations among consumers businesses, and the financial sector remained broadly anchored. The strong disinflation during the past 14 months has been supported by the relatively tight monetary policy stance, cedi appreciation, and improved food supply conditions. Growth in monetary aggregates continued to slow in February 2026, reflecting the relatively tight monetary policy stance. Reserve money contracted by 0.5% year-on-year in February, compared to 68.8% growth a year earlier. Also, broad money supply growth eased to 16% from 33.1% over the same period. Interest rates on short-term bills declined sharply in the first 2 months of 2026 on the back of easing inflation expectations and fiscal restraint. Yields on the benchmark instrument, the 91-day Treasury bill, declined sharply in February. And also, average bank lending rates declined to 19.2% in February 2026 from 30.1% same month last year, leading to a gradual increase in private sector credit. Provisional data show that fiscal outturn for the period January to December 2025 was marked by constrained government spending due to commitment control measures amid shortfalls in revenue. In the review period, the overall fiscal deficit on commitment basis was 1% of GDP, below the budget target deficit of 2.8%. On commitment basis, the primary balance recorded a surplus of 2.6% of GDP, exceeding the target of 1.5%. At the end of December 2025, the provisional public debt stock was equivalent to 45.3% of GDP, down from 61.8% at the end of December 2024. The banking sector performance improved in February 2026. Total assets increased, supported by domestic deposits, domestic borrowings, and shareholders' funds. The asset growth was mainly driven by investments, which rose by 57.5% compared to 8.6% growth in February 2025. The financial soundness indicators in terms of profitability, liquidity, solvency, asset quality, and efficiency, these all improved over the period. The non-performing loans, or NPLs ratio, declined to 18.7% in February 2026 from 22.6% a year earlier, driven by a pickup in bank credits and a contraction in the NPL stock. Despite improvement in asset quality, the NPL ratio remains a key risk to the banking sector. Going forward, the bank has put in place measures for the full implementation of the regulatory guidelines that are aimed at reducing NPLs in the banking industry. The external sector remained strong at the start of the year. The trade surplus improved to $3.7 billion in the first 2 months, compared with $2.1 billion during the same period last year, driven by higher gold export earnings and modest import growth. Gross international reserves, on the other hand, increased to $14.8 billion, which is equivalent to 5.8 months of imports cover as at end February 2026, up from $13.8 billion, which is equivalent to 5.7 months of imports cover at end December 2025. Reflecting the strong external sector, the cedi has remained relatively stable. And looking ahead, reserve accumulation is expected to strengthen further, especially under the Ghana Accelerated National Reserve Accumulation Program, which aims to increase the import cover to 15 months by 2028. In taking the policy decision, the committee, the Mpc, noted continued improvements in domestic macroeconomic conditions during the first 2 months of the year. However, rising geopolitical tensions in the Middle East have deepened uncertainty in the external sector. The bank's latest forecast suggested that headline inflation will remain within the medium-term target. An upside risk to the inflation outlook includes the likely pass-through of higher crude oil prices and escalating geopolitical tensions. In the view of the committee, despite these upside risks to the inflation profile, the favorable domestic macroeconomic conditions, and also the high prevailing real interest rates, these provide scope to ease the policy rate further. Consequently, the MPC decided to reduce the monetary policy rate by 150 basis points to 14%. The committee will continue to closely monitor developments, especially in the Middle East, and its potential implications on the inflation outlook. The committee stands ready to take appropriate policy actions as needed to safeguard price stability. And on the usual informational note, the next Monetary Policy Committee meeting is scheduled for May 18th to 20th, 2026. That meeting also will conclude on May 20th, 2026, with the announcement of the policy decision. I thank you for your attention.
Thank you very much, Governor Dr. Johnson Pandit-Esiama. If you've just joined us, this is the 129th Mpc Press Briefing, and you just listened to Governor Dr. Johnson Pandit-Esiama lowering the monetary policy rate by 150 basis points to 14%. Ladies and gentlemen, we're also live on Joy TV and also on some websites, BNFT, Graphic, Ghana Web, and also CTTV. Members of the media, how we always do it. We are going to take 4 rounds of questions. So you mentioned the media house, your name first, the media house that you represent, and kindly do not put narratives to your question. We just go straight to the point, and we take 4 questions at a time, 1 per each media house. The usual suspects, 1 per each media house. Thank you.
Thank you.
Yes.
All right. Good afternoon, Governor. My name is Joshua Wolasi Amlanu with the Business and Financial Times. So during the pre-MPC, you raised a concern regards to the new policy with regards to the gold accumulation. I would want to understand what was the discussion at the committee level with regards to the concentration risks that brings, as well as the liquidity impact that will have on the market. Thank you.
Yeah. Lord.
Thank you very much, Governor. My name is Lord Nate. I write for 3news.com. So, Governor, you mentioned that the banking sector's performance is improving. On the back of this, I want to ask this question. Last year, during the 125th MPC press conference, you mentioned that the central bank was going to assess the nostril accounts of the commercial banks. This was during the period that commercial banks were reported to have experienced shortage of dollars in the system. So I want an update on that one, the assessment of the nostril accounts of the commercial banks. Thank you.
Thomas. Yeah.
Good afternoon, Governor. My name is Thomas Emile, and I represent Corporate Guardian magazine. Governor, you said that you expect inflation to remain within the central bank's bands, 6 to 10%. Now, right now, inflation is far below the minimum of that band. Does the committee expect any uptick in inflation at all below where it is now, above where it is now?
Thank you. Yes, next one.
My name is James Ishen from Joy News. Governor, I want to know, given the rising global oil prices and geopolitical tension, isn't this rate cut risky at this time? And also, there seemed to be a credit to the private sector, which seemed to be subdued. What complementary measures is the bank considering beyond the rate cut to stimulate lending?
Put it off. Yes, thank you. Governor, we have four questions.
So we have four questions. First one on GANRAP. Your question was about concentration risks. Well, GANRAP is not only about gold. If you look at the document that was issued, it is broad. There's focus on the non-traditional exports, scaling up those as well. And so it's not just about gold, even though gold is a strong part of it. Liquidity impact, that will be subjected to the active reserve management that the central bank conducts. And so we don't see a problem on that. It is a program that the central bank put together with the Ministry of Finance, and so it is all well thought through. Of course, the fine details are still being worked out at this point, and so we don't see that problem of concentration risk, as you mentioned. Then there was a second question on nostro account. Yes, I remember sometime last year we mentioned as part of the general FX reforms that we're implementing, that we're going to monitor these inflows, our FX, wherever it is, be it in the nostrils of banks, be it located anywhere. We're going to make sure that these are used to support, legitimate imports into the country. And we've been doing a good job at that. Remember the new FX framework that we introduced. You are aware of that already. And it's working very, very, very well. We've stepped up our monitoring efforts. We are seeing remittance inflows resume through the banking industry. And we continue to monitor these actively going forward. So yes, we have improved as far as our monitoring efforts are concerned on that note. Then Toma was asking on inflation, whether we expect it to uptick. Well, it all depends on whether the problem in the Middle East becomes persistent. For sure, because we are net importers of petroleum products. Certainly, if global oil prices surge, that will impact on export prices right here in Ghana. And as you are aware, it feeds into domestic inflation. So certainly, there's that potential. But I must be quick to add that this is not the first time. There are a packet of, a set of measures that government can implement to cushion the effect of these. We've all been hearing that the authorities are thinking of ways, to cushion against those pressures. We're also monitoring what other countries are doing. There's this interesting one of Sri Lanka where they have reduced the 5-day working week to 4 days. Assuming that on holidays, the people don't use as much petroleum. Probably in Ghana, it will be the reverse. I'm sure people drive more even on holidays than. But let's wait for government to come out with the set of measures in case it becomes persistent to cushion the impact. The good thing in all these is we've accumulated enough reserves, nearly 5.9 months of imports cover. That should allow us to protect the gains going forward. But we are monitoring the situation, and the MPC is ready to act if we need to reevaluate the situation once again. Then, Joy News. Isn't this cut problematic? Not at all. Remember, this has been 3 days of going through a lot of material, looking at the outlook, evaluating the issues. We look at the banking sector. It is now solvent, it is liquid, it's growing by way of assets. NPLs, yes, elevated, but it's coming down. Private sector credit beginning to recover. A number of things we can do. First of all, the general level of interest rates is going down. So certainly the policy decision taken today should go to support, higher levels of private sector credit provision. We are talking with banks. We are engaging them. And you are aware that the general reference rate, for example, which the banks compute themselves, is now just about 11% or so. It has come down significantly. What that means is that some borrowers are able to borrow. They are able to access loans at rates as low as 11.7% thereabout. So yes, we are doing everything possible to shore up private sector credit. We are working with banks actively to make sure that financial intermediation is scaled up. I believe those are the 4 questions. The first set, yes. So we can go to the second set.
Thank you very much, Governor. So the next round of questions, please.
Hello, good afternoon. Nanoye, Class Media Group. Governor, with an end to the war not in sight, would you want to relook at your international reserves target of 15 months import cover by 2028? And I would want to also find out whether there's any collaboration with the fiscal side on concrete measures to cushion Ghanaians. Have they come to you on any concrete measures or support? Thank you.
Okay, Governor, my name is Ellen from Wizard TV. My question is on the legacy debt owed by Cocoa Board and government's plans to convert that. How would that reflect on Bank of Ghana's bank sheets, and would it affect future monetary policy operations? Thank you.
Thank you. My name is Moses from Bloomberg. Governor, how have we assessed the impact of the war on the FX market? And would the bank take any additional measures in that regard, aside from the spot FX sales? Thanks.
Yes, next one.
Echo, are you ready?
Okay, thank you. I can take the question. Governor, thank you for the decision. Given that most of our raw gold exports goes to the Middle Eastern region, and given the ongoing travel restrictions and bans across that region, how is that affecting the exportation of our gold and by extension the FX inflows? And are there any alternative markets that are maybe safer to receive Ghana's gold, especially from the small scale sector? Thank you.
Yeah, Governor, we have 4 questions.
Okay, so maybe we should start with the last one, Echo. Yes, you're right. Concentration of any kind can be risky. And I'm sure the gold board will be better placed as far as the small scale gold is concerned. But based on the data we have, there hasn't been a significant disruption. Exports of small scale gold is ongoing. We can get you the precise figures. I believe the head of the gold desk is right here. He can give you a sense of the exports that have been going to Dubai and other destinations over the past 2 months. But I do agree with you, the need to diversify the destinations going forward. Moses was asking about impact of the war on our FX. So if oil prices surge, for example, now I hear it's around $100 per barrel. If oil prices surge, what that means that the oil import bill also surges accordingly. And so you need more FX to be able to support the same volumes as you were doing before. And so it has a direct, effect on the FX, situation. If it turns out that the global shock is temporary, it's just transitory, that is easy to manage. But if it turns out that it is persistent, then you have to have a set of measures to stem the situation. A lot depends on what we do, but also what the fiscal authorities do. So the first thing we are saying is that we do have adequate reserves, to support these for a while. But we are working together with the fiscal authorities. I'm sure government will come out shortly based on their assessment of the situation, whether this is going to become, persistent or not. I believe government is working on something, and so we can wait to hear from government in that respect. But let me assure you that we talk with them regularly. We make sure that we are ready to protect the gains that have been made. Now, someone asked about the legacy debts that Cocoa Board has for the bank. Yes, there's a debt of about 1.38 billion that Cocoa Board, owes the central bank. But I must say that Cocoa Board has been servicing the interest, the coupon payments. Cocoa Board has never defaulted. They've been servicing these. And these are not new debt. This is debt that has been accumulated for a long time now, over 10 years ago. We are aware that government has taken the decision, probably, to take over that debt. For us, that will be a good thing. It will help our capitalization. But at this point, we are still in talks with government. And I can only assure you it will not impact any way adversely on our monetary policy operations. On the contrary, it should rather help our capitalization going forward. But we are still in talks with the Minister of Finance on that. Then the last one, any collaboration with the fiscal authorities. Oh, that is what I just spoke about, on ways to cushion the country against, persistent, increases in oil prices. Yes, we are thinking through it. As I mentioned, we need to assess whether it's going to be a transitory global shock or whether it will be persistent. At this MPC round, we're still observing, we're still monitoring the situation. We are looking at oil prices. We are looking at all other commodity prices. As of this morning, when I checked, gold prices are declined sharply to about 4,800. And so there's a lot of volatility out there. So it's for us to keep watching and to assess the situation, and that we will take the appropriate decision accordingly. I believe that does for the four questions under the second set.
Mr. Chairman, let me check with Moses again. Mozart, does it satisfy your question as well? All right, thank you very much. Yes.
Yes.
Thanks a lot. So thank you, Mr. Chairman. So we take the next round of questions, please.
I want to relook at the 15 months import cover because of the geopolitical tensions. Thank you.
The 15 months imports cover under the gun wrap, this is a target by 2028, I guess. It's not a target for like this year. This is a medium-term target that we expect to achieve. And as I mentioned, it's about the reserves. It's not just about gold. So that target it has a lot of components within there. Scaling up non-traditional exports, they are all part of it. If we achieve that level of reserve, it's good. It strengthens, our external resilience. And as a commodity exporting country, as you know, previously we were borrowing from the Eurobond markets just to put into our reserves. We were doing swaps, and those were very expensive, to build reserves. Fortunately, now we don't have to borrow anymore. We are just able to accumulate these reserves and then be able to build up our resilience. So that is what we seek to do. Yes, the way to accumulate those reserves is important. You have to make sure that any, negative, impacts are kept to the barest minimum. We've heard people talk about the possible liquidity impacts. However, we have it covered. We've figured it out. We've thought through it deeply. And as I mentioned, the central bank was very much a part of that strategy. We worked together with the Minister of Finance and his team, and so we have it all covered. It's something that is not new to us. We'll manage the process until we get to that target. Thank you.
Thank you, Mr. Chairman. If you just joined us on our social media channel, this is the 129th Mpc Press Briefing, and Governor Dr. Johnson Pandite Siama, the chairman of the committee, has just announced a 150 basis points reduction in the policy rate to 14%. So we take the next round of questions, and as we are all aware, we have to be snappy and straight to the point.
Thank you. Good afternoon. My name is Francis Into, Ghana News Agency. Governor, I would want to find out how far have you reached in ensuring that the losses incurred from G4R is transferred onto government's book? And since January 2026, what specific measures has been taken to address these losses and what has been the impact? Thank you.
Thank you.
Can I take a second bite to the chair? All right, Governor, in the absence of any other new question, I have another one. Can you share with us some of your mitigative measures you're putting in place to limit the pass-through effects of the global price shocks on our markets, especially given that we still intend to keep inflation within the band targets? Thank you.
Thank you. Aaron, please, I want to find out from you what the projection for the local currencies performance for the year is. At the end of the year, what should we expect regarding the performance of the currency, the CD currency, please? Thank you.
Yes.
Please, we have limited to the microphone to one person at a time. So if you see it later for you, kindly go ahead and speak. Okay? Right.
My name is Adnan Adams. I work for Economic Times newspaper. I wanted to find out, March ending was the deadline for the two banks that are left to meet the capital requirement. So, or is the current update as getting to the end of March?
Okay. So we take those.
Mr.
That's
Chairman,
four. So again, if I can start with the last one, capital recapitalization deadline for banks. As at December 2025, I mentioned these at the first MPC meeting. All banks, except two, had met it as at the end of December 2025. For the two remaining banks, we gave them up to end of March to also meet it. As we speak, one of the two is on course to meeting that, whilst the other one, is also making some strong efforts in that regard. And so we envisage that the two banks will indeed be able to recapitalize. For one of the two, they may have to be given some little extension. But eventually, we do expect that before the half year, at most, all two banks will also be able to recapitalize, and then we can move forward. Then someone asked about our projection of the CD. Unfortunately, we treat the CD as an endogenous variable. And so we don't issue a target, for the CD. The target we have is for inflation. We allow the CD to float, to be determined by all other variables. And so we don't have any explicit target for it. I've always mentioned that what we have is a floating exchange rate framework. It's a managed floating operationally. So our aim in all these is to ensure that there is no excessive volatility. That's what we try to control, excessive volatility. But as for the particular rate that the CD achieves or attains at any point in time, we allow that to be market determined. For those of you who are familiar with the new FX framework, there's an auction twice a week, and banks freely submit their bids, and the auction process, everything is transparent. I believe we have issued notices to that effect. So that's the framework that we have. We don't have any explicit target for the CD at all. All we can tell you is we think we'll be able to avoid excessive volatility in the CD, barring any unforeseen shock, such as a persistent, persistence in the Middle East crisis and its potential impacts. We should be able to maintain exchange rate stability. Then ECHO, the mitigating measures to limit the pass-through effects. The situation is still evolving. The MPC took a deep dive into what we can do as a central bank. That discussion is still on. Remember, a good part of it has to be from the other side, the fiscal authorities, and so you might as well ask the Minister of Finance. We are aware that there are some discussions ongoing, even from this week. They're studying the situation. They will very soon come out with what government intends to do to mitigate the impact. For us, our job is to maintain an appropriate monetary policy stance. Our job is to ensure that we have adequate reserve buffers if we have to act, so we can deploy the set of tools needed to contain the situation. And I mentioned that the Monetary Policy Committee has signaled its readiness to respond. If we have to have an emergency meeting just to evaluate the situation and consider other tools necessary, we will. But as of now, we haven't announced any set of measures as yet. The whole thing is being monitored, and hopefully very soon we might hear something. But it might as well turn out to be a temporary crisis. Who knows? If the war ends next week, it goes with all the potential challenges that could come with it. So that's where we are currently. Moses, I'm sure that answers your question. Okay, we will announce if we develop those measures. Then the first one from the GNA, you were asking about the goal for reserves losses. So first of all, there is an ongoing audit of the entire domestic DGPP, domestic gold purchase program, not just for the G4R, but also for the other components, including the G4O. The audit is ongoing, and we want to wait for the results of that audit, and then we can take the next steps. And I'm happy to announce that government is doing its part to support the central bank in this regard. Remember, under the amendment to our act, the Bank of Ghana amendment law that was passed just about 3 months ago, government has committed to recapitalize the Bank of Ghana. As you are aware, our net equity position has deteriorated. What it means is that Bank of Ghana itself needs to recapitalize. The finance minister has done a good job. They have front-loaded that recapitalization agenda. They've already issued some bonds to us, which is a good step, which shows government's commitment to recapitalize the central bank and to address the negative net equity position. So as far as our balance sheet is concerned, government is doing everything possible to help us get back to positive net equity. However, the actual losses in terms of the DGPP from the time it started in 2022 up to now, all those are being audited And so after they are audited, the appropriate measures will be taken. Thank you.
Thank you very much. So we'll be having the last round of questions. But before we do that, let me say that the governor is supported by the other members of the MPC. The MPC is a 7-member committee. And here we have Dr. Zachary Mumuni, the first deputy governor, Mrs. Matilda Santier-Siedu, the second deputy governor, Dr. Philippa Bradiotu, our head of research. We have Gershon Ablezowu, who is the head of treasury, and Professor Joshua Abel. They are all here to support the governor. Professor Ebo Texan is the 7th member, but is out of the jurisdiction at this point in time. So if you've just joined us, it's the 129th Mpc Press Briefing by the governor, Dr. Johnson Pandit Esiama. And the monetary policy rate has been reduced by 150 basis points to 14%. So we'll take the last round of questions. And again, 4 questions. Thank you.
Governor, can I take advantage again?
Yes, Akko, you can.
Thank you so much, Governor.
Yeah.
Governor, you see, when we hear the word recapitalization, it takes us to a few years back. So, and then of course, there's something called the minimum capital requirement that used to be 400 million, about 40, whatever it is in dollars now. But to hear the central bank needing recapitalization is not a language we hear all the time. Tell me, when you talk about that, what do you mean? How much money are we talking about to remove you from the negative net equity position to a positive net equity position? At least a range. It helps. Thank you.
Maybe I should answer that one before we take any more. So, Echo, rest assured that the central bank's negative net equity position doesn't in any way prevent it from carrying out its mandate. We've always maintained that the central bank is a peculiar institution. We are able to conduct our operations as mandated on a continued basis. We say that we are still policy solvent, but nonetheless, we have to recapitalize in the light of the negative net equity position that started from somewhere 2022, in the midst of the crisis that occurred. And I've indicated that during last year, the negative net equity position deteriorated further. However, government, and remember, government is the sole shareholder of the central bank. And so when you need to recapitalize, who else has to recapitalize the central bank? It is government. Government has committed to do that. The law mandates it to do it by 2032. However, government has decided to start immediately. And they have given us a bond to that effect already, which is a good sign. Government has given us an MOU committing to get us out of that position as early as possible. So rest assured, no worries at all. We will continue to meet our mandate of price and exchange rate stability as well as financial sector stability. Nothing is going to get in the way at all. No worries.
Can I do a follow-up, please? Governor, yes, but it's a thing that followed the money. In order, you said we hear you, but you didn't put money to it. So say that maybe XYZ is needed, $1 million, $1 billion, for this whole process, for the Central Bank of the Republic of Ghana to be solvent and then have a positive equity position. Please, a bit more. Thank you.
No, so if we will publish our financial accounts by the end of this month, by the end of March, and then you can see where the pressures came from. For example, our law mandates that government more or less helps us to meet, for example, the cost of monetary policy. 2025, we incurred huge, amounts to be able to achieve the low inflation that we achieved last year. The exchange rate stability we got last year, it came at a cost. To give you some figures, and I've thrown those figures out already, monetary operations alone, we spent close to 17 billion last year. It doesn't come cheap. But you know, stability itself is a public good. It's the bedrock of everything we do in this country. And the law mandates that government more or less supports us when it comes to those. And so what I'm telling you is we've engaged government, and government has shown the goodwill. It has already started, you know, helping us to recover some of those costs. We are talking with them. We have an MOU that we are working on. And so that over time, we are able to recover all those costs and be able to work our way back into positive equity. But remain assured that the work we do, we are mandated to do under our act, will not be impacted at all. We are still policy solvent. We'll continue to do what the people of Ghana have access to do for them. Thank you.
Thank you very much. Governor Norvan, your hand has been up for some time. Yes.
My name is Norvan Akohefo. Thank you, Mr. Governor. I have two questions. I know you've tried to answer the first one, but if you can give us some clarity, what specific domestic indicators actually gave the MPC enough confidence to ease so aggressively at this point? If you can tell us that. And we've been worried about how, you know, the cuts in the policy rate, you know, transmit direct into household and all that. So we want to find out from you, how quickly does the bank expect today's decision to transmit into lower lending rates for businesses and household? And what is your message to the commercial banks themselves to ensure that the cut delivers real relief to the productive sectors rather than remaining largely on paper?
Right. Thank you very much, Norvan. I think Eko took 2 of the 4 questions. So, Norvan, I'll treat yours as one. Nanoye and I think Lord will be the last 2. Okay, so Nana and Lord.
Yeah, mine is a follow-up to Norvan's own. So before this press conference, I spoke to Guta, and they said that they applaud you for reducing the rate, but they wanted to reflect on lending rates. So if you can just, maybe you want to assure them that that will happen.
All right, thank you. So, Governor, on Monday, when you opened the sitting, you highlighted that the Middle East crisis poses significant threats to the fundamentals of this economy. Now, last week, the MP, the National Petroleum Authority, the CEO explained that about 60% of the oil that we import into this country is coming in from Europe. And then we have Tema Oil Refinery and Senti also doing about 30%. So really, we are not getting that much from the Middle East. So I want to ask or find out from you, to what extent does this particular Middle East crisis pose a danger to our economy, given that we do not import a lot from the Middle East? Thank you.
These are the questions.
Yeah, so we have 4 of them. So as usual, if we can start with the 4th one, yes, it may be true that 60% of our oil comes from Europe, but global oil prices are global oil prices. It is what it is. And when oil prices go up, they don't go up in Europe and don't go up in the Middle East. It's the same, whatever it is. So the risks are significant. As I mentioned earlier, it all depends on whether it is transitory or whether it is persistent. The good part is we have adequate reserves as far as the central bank is concerned. But if it's going to be persistent, government is discussing these issues. I'm sure very soon they will come out, especially if it is clear that it's a crisis that will be persistent. There are a number of relief measures that can be rolled out to protect Ghanaians, and so government will do its part. But we are also monitoring the situation on our side. Then Guta, our good friends Guta, they would want to see lower lending rates, right? They want to see the policy rate reflect. And I believe so far we've done that. Compared to where we started last year, lending rates have gone down significantly. So we're on course. We're on the right path. Look at where government T-bill rates are currently. Gradually, banks are calling people, and I'm hearing those reports. Banks calling them on phone, asking them to apply for a loan. Gradually, we are getting there. But as I always say, one problem we have in this country is everybody goes to the bank to borrow money. But it mustn't be so. You know, banks are financial intermediaries, right? You should be able to go to the stock exchange and borrow money directly. You know, there are companies that can issue commercial paper. Banks will not be involved. And you know, most of the time you will get it, you know, such monies cheaper than you get through a bank. The only thing there is you'll be required to have some higher standards when it comes to governance, when it comes to transparency, when it comes to accountability. You are held up to higher standards. And we want to see, you know, more companies going for that type of financing, especially when what you are looking for is a longer term financing. There's what you can use a bank loan for, but if it is a longer term financing you are looking for, a bank is not the first place you should go. So we are working together with the capital market regulator, if you've been monitoring, to increase, you know, the access to such financing to Ghanaian firms. So we'll do our part to improve on the situation for GUTA and its members. Then Norman, you were asking why the MPC took this decision. Domestic inflation is on the decline, you are aware. And from the assessment, as far as the outlook is concerned, the MPC felt that the trend decline will continue. We weighed the risks, you know, and it's clear that at this MPC round, we have to wait and watch. The significant risk in the outlook is the Middle East, you know, crisis and its potential impact. As we speak, it's not very clear if this is going to be persistent or not. We hear the US president, for example, saying that they are going to wrap this up very soon. I listened to him about 3 days ago. So we are monitoring the situation. If indeed they are able to wrap it up very soon, that means it will be short term and we will get over this. So we are monitoring the situation, Northern. You were also asking about how this ease goes to support the productive sectors. That is what it is. That is exactly what I just said. Lending rates, they are beneficial, whether it's to a productive sector or not. But what we would want to see from the central bank is that these firms patronize not just the banks, but also the capital market. Even as lending rates, you know, go down, we want to see them take advantage of the opportunities that are there. And as we speak, maybe you can engage the capital market regulator to see what's going on there. There are firms that are borrowing cheaper through the capital market. The only thing is for you to commit to be subjected to higher standards when it comes to ownership, when it comes to, you know, transparency, regulatory issues. The standards are higher. But at the end of the day, it helps to run your business. So we should encourage more and more of our colleagues to take advantage of those. Now, Eko, you still asked about recapitalization. I missed it. Would you be kind to, I guess I answered you. If there are any residual issues on recapitalization, it's done. All right.
You did, thanks.
Okay, very well. Very well. So, Otabel, it's okay. We are still here. If there's any bonus question, we are ready to take it.
Right. Okay, my name is Mark. I work with UTV. Governor, I've been hearing this thing, and I'm reading from Kofi Bentel's page. He said, I'm quoting, "Don't forget this government sold 18 tons of our gold when all forecasts showed that gold prices were rising. Now they want to buy it back at a loss of almost $2 billion. I sincerely hope they have good reasons for that. So far, I haven't heard any good reason," unquote. Governor, I get confused when I hear some of these things. Did we sell our gold for good reasons, and did it benefit Ghanaians? Thank you very much.
All right. So, you know, these things, you have to put them into proper context. It's not that literal. So, as I said today, gold prices are at 4,800. It went up to 5,003. Now, what that tells you is that it's very volatile. there's no guarantee that it will stay at 5.3 forever. Now, a decision was taken last year to diversify. At the time, there was no indication that the Venezuela crisis, for example, was going to escalate, or the Iran crisis was going to escalate. At the time, everyone thought prices had peaked, and then it was around 4,200. Everyone thought the prices, had gone, up to maximum levels. Now, in taking those decisions, the appropriate channels were used. There were no breaches. A lot of the things we hear out there are just things you don't even want to respond to. We have all the information. I was in Parliament last week to answer all those questions. Mr. Kofi Bentil, ask him to come to us anytime. Just ask him to give me a call. I'm available to open up the books. Those things being said outside there, I don't know what it's supposed to achieve. But we are here transparently. We'll walk you through the books, why we had to take that decision, why we believe it's a good decision at that time. Going forward, it's still a good idea to accumulate, gold. Why? Because given where we are now, we can expect gold prices, to go up over the next couple of years. If you study what's happening geopolitically, it makes sense to accumulate gold right now, whether at 4,800 or 4,005 or at 5,003. You can be sure that gold prices will go up significantly within the next 2 or 3 years. So it's fine to buy new, products, production of gold. Currently, hold it. In the future, prices will go up. And if at some point, strategically, a decision is made to diversify again, you do it. Remember that transaction, we made a profit of over $1.3 billion on that. It's all within our international reserves. And when we say we have 5.9 months of imports cover, it's all within there. There are no losses, nothing lost whatsoever. If we knew that gold prices would forever be at 5,300, maybe that would be considered. But today, as we speak, it's dropped, and it could go down, it could go up. It's a very volatile commodity. And so we shouldn't just draw such conclusions. They are two separate things. What was done last year to diversify was a different thing. What is being done now under gun wrap and other strategies to accumulate is also a different thing. But maybe through your channel, encourage Mr. Kofi Bentil to pay me a visit. He should stop all those wild allegations. We are transparent. We are ready to answer him. I thought he would be in Parliament when we went there to discuss it. We are ready. He should just make a call and come over. We are ready to walk him through it. Thank you.
Thank you very much. I think we can bring the program to a close now. I can't see anyone coming up again. Mr. Governor, I think we can do that. As you heard the Governor, there's a lot of volatility out there. It means that economies are not deterministic, and therefore you cannot solve economic problems with neat equations. Our actions in actions all influence macroeconomic outcomes, including the reports that you are going to write out there. Gold diversification gone into reserves, which is still earning interest, does not mean anything has been dissipated. So on that note, Mr. Governor, I thank you so much for engaging us once again and enlightening all of us on the discussions on today's Mpc program. Let me also say that we are here with our advisors. Professor John Gachi is an advisor to the Governor, and Dr. John Kwache is also here with us. And we have another special one also, Eric Hammond, who also works closely with the Governor. Thank you once again, members of the Mpc committee.
Thank you very much. And maybe just by way of my final words, we now publish we receive some questions from the media. There are people who send in questions. They don't come here for the press conference, but they send through questions. We compile all those and we provide answers, which Mr. Otabil and his team, they put it out there. We encourage the media to feed on them, so that people can get more insights on these questions. So how soon do we expect to have the next out? The set of questions, Q&As for the media?
Yes, the submissions go out on Tuesday. By Friday, the Q&A was.
Very well. So please look out for that, and then you can help disseminate those for us as well. Thank you.
Thank you. On that note, please may we rise for the governor and the MPs.